we are going to discuss a few things that I have sort of prepped the panel to be aware of and to hopefully have some thoughts on. I do have one mini gotcha question at the end that I will spring on them. It's not a really gotcha question, but it's kind of a futuristic prediction question. So there, I've tilted the idea towards you. Secondly, I'm a big believer in Q&A, so I'm warning the audience that I will be asking you to ask the panel questions for the last 10 or so minutes, maybe 12 minutes. I also reserve the right as moderator to cut off a question that is actually a sales pitch or a sermon. So don't take it personally if I do. And thirdly, I'm such a believer in Q&A that if there is no Q&A, I will actually call on somebody. So just so you know, Tom, I'm sorry, so I'll call on somebody who should have a question of this august panel. But we have an interesting kind of layout of the topology of the three. I won't go through their bios, nor will I ask them to recount their bios. They are printed out in the program in front of you. I encourage you to read them. But you'll see that we have sort of the arc of investment and growth. We have an incubation arena that is here to talk about that part. We have a CEO and founder who's growing a company, and then we have a venture capitalist who would represent the next stage and hopefully the final stage of growth and financing for a company that will hopefully grow and be acquired or go public. So you have sort of the lifespan, so to speak, of idea generation, idea initiation and company initiation, and then the funding of that idea. So if I may just ask the panelists starting from the far side to give me an example, kind of a use case of what you do every day. What's a typical day for you, a typical customer interaction, a typical supplier or investor interaction, typical company interaction? Just walk us through a typical use case of what you and your entity does.
Sure. So I'm the CEO and co-founder of Halcyon, and our mission is to catalyze emerging creatives who are striving for a better world, which means that we have an incubator at Halcyon House in Georgetown that takes the very best social entrepreneurs from around the world. We get about 300, actually over 300 applications for every 8 spots. So to give you an image of what that looks like, we then have a house full of the kindest and smartest people solving some of these complex social problems that you could ever hope to meet. And now we have 55 of them in our family. So a great way to describe what my day is like is entering into, for any X-Men fans out there, Professor Charles Xavier's X-Men Academy for the Gifted, but for social entrepreneurs. And we help them with everything. And any given day we would have a panel of potential investors giving them advice on how they might pitch and approach an investor, to getting advice from Arnold and Porter, one of our great partners, on how you might do a better job of negotiating a contract, to, currently we have one guy who's working on a business selling algae, because it is actually sort of the fuel and food of the future. So in our top floor, we have an algae farm. I mean, it really is like not quite a predictable day, but that's what I love about it.
Excellent. Zvi?
Yeah, absolutely. So in terms of what Contactually does, or an example of a customer interaction, so the challenge that we set out to solve with Contactually is, I think everyone in this room knows that relationships are one of the most critical assets that a professional needs to have and maintain. But it's really hard. So for example, we work with a lot of residential real estate agents and some of the top brokerages in the world. And according to the National Association of Realtors, 88% of buyers would work with their agent again, but only 12% actually do a few years down the line. So stark contrast out there. And so where Contactually is really innovating is we've turned that kind of New Year's resolution of, yes, I want to be better at maintaining my relationships, into an exact strategy that can be followed and executed on every single day. In terms of what I do, I've pretty much hired myself out of a job. So I'm thankful enough to have built a team that's a lot smarter than me. I'm not allowed to code anymore. I'm not allowed to sell anymore. I'm allowed to talk to customers once in a while. So we have one of our big Sotheby's customers coming in today. But in general, that gives us the space to focus on where does Contactually be in 2, 3, 4 years from now.
Are you allowed to be on panels? Because I certainly hope this is approved for you today, okay?
Ask me in 6 months, we'll probably find someone better for that.
Excellent. Yeah. Jenny?
Hey. I'm the founder and managing partner of Rethink Impact, and what we focus on, we're the largest impact fund in the U.S. that focuses on gender investing. So basically, we invest in companies that have at least one female on the top leadership team. And you would think that that was pretty common, but bizarrely, women get about 2.5% of all venture capital dollars. So it's a pretty good market opportunity. And all of our companies do something good for the world, but they're all ROI focused. So we do not concessionary returns, pure venture style returns. And so my days are filled with talking to many, many companies that we're looking at. We tend to look at companies once they have at least $1 million in revenue, often closer to 20, 30, 40, 50 million. So we come in at an A, B, C round, and we're helping them scale. And then the other thing I spend my time doing is meeting with our current companies and helping them, whether it's helping them raise money, helping them meet people, anything I can do to help them do the amazing work they're doing for the world more efficiently and makes their lives easier. If any of you are CEOs, you know that you really have like multiple jobs, except for you. And so we try to make that lift a lot easier.
So the first question is to Jenny and Kate. If you recall back in the 90s, we were all exhorted to buy Energy Star compliant computer monitors, remember that? And they were supposed to be good for the environment. We found out years later that in fact they had just as much mercury in them as everything else. It was kind of a false label that was sort of embarrassing. And one of the words that I'm hearing a lot now is impact investing, and you touched on it, and obviously Kate, you as well. I think that word is getting stretched to a point where it may not mean to many people what it should mean. What are some challenges and opportunities you see in the impact investing arena from the venture side, from the incubation side, and what are the problems that you see facing us in this definition? I'll start with you, Kate.
Sure. I think that's a really excellent point. Actually, it's something that I think for people that are sort of social entrepreneurs with intent and really doing sort of the traditional social entrepreneur thing, which is when you really prioritize profit and impact equally, then it does become frustrating when, for example, a corporate social responsibility arm starts calling their corporate social responsibility social impact or social enterprise, because I'm not convinced yet that you can back an enormous billion-dollar entity into being a social enterprise. I think that is something that you build in from the beginning in how you treat people and monitoring your supply chain and the intent with which you start. Some interesting statistics. In the next 10 years, about 40% of the Forbes 500 companies that we know now will not exist. They will have merged or disappeared. And it's our big bet that people will be aligning their purchasing power with companies that have integrity and that are, many of our social enterprise startups today. It's certainly what the millennials are doing with their money. And I don't think that's going to stop.
Jenny?
Yeah, I mean, so impact investing, the term, and impact investing has grown by 216% in the last few years. That's just compared to regular investing assets growing by about 15%. So it is growing by leaps and bounds, but there's a wide range of what people mean by impact, from everything from concessionary return to sort of the pure market rate return. And then even within that is, it's everything from a Tom's shoes where you're giving away some of your product. The challenge with that is that if an investor comes in that no longer likes you giving it away and you cut that part off, is it still an impact business, right? Is a shoe business, and I mean, some extent everything's impact. And then similarly, there's companies that employ people who maybe have trouble getting work, but that can be taken away. Our focus has been on what we call convergent business models, where the impact and the financial returns go hand in hand. So you can't remove the impact or strip it out, even if you wanted to, because it's so intricately connected and intertwined with the financial returns. And we think that that is probably, for us at least, the most sustainable from a business standpoint and from an impact standpoint.
We'll return to this in a second, but Zvi, I'm going to change gears and go to you. The Valley, Silicon Valley gets all the money and the investments and everything, and as many famously know, when I was at the SBA, I used to routinely remind people that about 66% of all venture capital comes from and goes to 25 zip codes, and few of those zip codes are here. So what made you decide to found your company here, or did you consider the Valley or consider funding from the Valley if you have some, or is your funding from outside the Valley? And how do you see the schism between their reputation as the place to start companies and here in Washington, D.C., where we have capital and we have innovation and we have customers?
Yeah, absolutely. So the answer is yes. We have raised both from inside the valley and outside the valley. We've raised 12 million capital to date so far. There are a number of different lenses to look through. In general, like when we talk to a lot of investors in the valley, why we got a lot of no's, and same with talking to investors who focus just on Boston and just in New York, what they're really looking for is how can you reduce execution risk in this company, right? And so understanding that was really helpful because they will make investments outside of the valley, but the bar is so much higher because they believe that companies based in the valley will just succeed more. They can, visit them, they can connect them. There's better access to talent out there, et cetera. And so early on, when we were unproven, yes, there was definitely tremendous pressure and tremendous opportunity for us to raise more capital were we in the valley. But for access to talent, quality of life, the way we wanted to build a business, we decided to stay here. We actually were initially founded out in the valley. And as time has gone on, and as we've kind of reduced the execution risk and proven that we can scale a company here, that's gone away. So yes, 2 years ago, we got tremendous offers from venture capitalists saying, "Hey, let us know when the moving truck pulls up, and we'll fund you." Nowadays, we get, when we're getting interest, it's more, "Hey, that's actually good that you're not in the valley."
Jenny, I'll go to you in a second, but I heard an interesting analogy recently, which is the difference between the valley and here. That out in the valley, all the CEOs know each other, and the VCs bid for their business. Here, all the VCs know each other, and the CEOs beg for their business. And that difference is the explanation for why pre-money valuations here in the Mid-Atlantic area and post-money valuations and sizes of rounds are distinctly lower than out in the valley. Do you see that, and do you agree with that analogy?
I think it's evolving. I think it's evening out a bit. We have partners in the Bay Area, New York, and in DC, so we're a bit of a hybrid. And I think that part of what's led us to invest in more places is the fact that we're taking advantage of technology that allows us to work remotely from each other. Right? Our last 10 investments were in 5 different cities. And I look at our pipeline. I was looking at this morning. We had, of our 593 companies that we've actually talked to or looked at in the last year, 109 are from this area alone. That's a big shift that's happened in part due to all the increase in incubators and others here, companies like Motley Fool, companies that have been here, AOL and others, and I think it's leading the DC region to be a much more exciting place for opportunities. And as venture capitalists who can invest anywhere in the country, it means that we actually look at things here. We funded EverFi, and then they had a great up round that Rise came in on. So we're seeing a lot of growth in this area, and we're excited about it.
Any concern or agreement, Kate, with some of the stuff that you're hearing from the other two panelists as far as the differences?
I would certainly agree with ZV about the fact that DC has tremendous upsides to it in terms of quality of life and the talent that is here. I have found that some of our fellows will struggle to find great coders and CTOs. So ZV, if you've got lots of time, you're welcome to come over and help our entrepreneurs.
Will do.
Excellent. I do think that DC is still a little bit conservative with their funding. I do think that people that have the money here to spend and invest will often start by looking outside of the area, which it would be nice to start to change that. And I think Tien does a phenomenal job of pulling this together and doing exactly that.
I just heard my first AOL joke, just so you know, post-transaction. Why were AOL and Yahoo bonded together under oath? That's the start of the joke. The answer is because no one should die alone. Sorry, I used to work at AOL, so I can make that. I can make that joke. So let's go to diversity. That's another word, almost like impact, that I think has a lot of emotional aspects to it, important emotional aspects to it, but it is also being used in ways that I think sometimes divert from the overall goal. And just as an aside, at the SBA, we made a huge effort in my area of investment and innovation to demand, or certainly to suggest and urge, the types of funds we invested in and the startups out of our SBIR program, which, by the way, one of which was iRobot, was an SBIR, a government-funded program that turned into a great company. But we tried to push diversity at the board level and certainly at the management level in the quote-unquote C-suite. But let's start with you, Jenny. Clearly, you and your colleagues are pushing that in a way that is both innovative and certainly energetic. What are you seeing? What are some reactions you're seeing from either the C-suite of companies that are not as gender diverse as you wish they were, or potentially limited partners that you talk to that say, I don't want to be limited by this sort of this prism that you've created? What are you seeing out there?
That's a great question. So we think it's a whole ecosystem that this takes, right? So it takes having the LPs, it takes having people in my role, less than 6% of people in my job making investment decisions are women in this country, of all venture capitalists. It takes having people that are in the C-suite, it takes the board, and so we're trying to tap into all of them. And I'd say on the LP side, and just among friends in this room, we have investors across 32 states, and I'd actually call that a type of diversity that most people don't focus on, right? Which is that most investment dollars in venture capital funds come from just the coast, and it changes your whole perspective when you're talking to LPs and investors around the country. I'd say a third of our investors a chunk of our investors came in because they really cared about our gender lens, and over half of our investor base are women, some of whom came through the work that Kate and I did together on We Capital, which is so exciting to have women right here in DC, but women all over the country. I'd say a chunk of our investors came in because of the social impact and this idea that they had heard that market rate returns and impact can go hand in hand. And then there was a group that would say to me, look, if you want to do the gender stuff and you want to do impact and that helps your marketing, great. I'm coming in because you and your partners have incredible financial track record, and that's why I'm coming to the table. And, I sort of am glad to have all three types, because it gives us an opportunity. I can't say there haven't been companies who we didn't say, look, you don't have enough diversity in your management team. We know that financial performance is higher, both when ethnic and racial diversity is at the top and when gender diversity is at the top, right? There's all sorts of data. So we can invest at this point. There are companies who thankfully say, okay, well, we'll work with us. And we think that the best way to make change, or at least one way to make change, is through capital. That
Kate,
money has a power.
Kate, I'll get to you in a second, but Zvi, I'm going to put you on the spot.
Yeah.
Are you planning to change your gender to fit the needs of tomorrow's investment community, or how is your company face this challenge?
I'm just going to add on and say gender balance of the company. I'll do whatever I can to help the company grow. Some limits. No, it's definitely a challenge, especially in this area where it's a growing talent pool, but still small. So I think we're still a few steps behind other areas. And we've done unconscious bias training. We are involved in Women Who Code, and we've had hosted Rails girls in our office and Black girls code in our office. And we do all these different community things, but it still comes down to that balance between wanting to build a diverse workforce and at the end of the day, seeing who it actually gets far enough in our interview process that you don't want to necessarily turn someone away at the interview stage just because they're a white male. And so we spend a lot of time kind of higher up in the funnel, both trying to contribute in the community to how to grow that funnel, but then also trying to cast as wide a net as possible.
I'm just going to add one thing just in case it's helpful or to anyone. When you go from 0 to 30% of your leadership team being women, you have a 15% increase in net revenue, is what studies are showing. And so I say that in that it's great that you're working on it. And I think I would just encourage anyone, if you don't have the pipeline in your network, there are now all sorts of digital ways to get connected to the pipeline. On the board side, there's things like board lists that exist that didn't used to exist. And so if you don't have the tools, I'm at Abramson Jenny, let me know, because it's not like there are amazing people who frankly just haven't been introduced to the tools that can help them do this. And it's not necessarily conscious. It's just that, to your point, you're running a business and you need to grow and you need to take the best talent you can. And so we want to help people find that talent.
I had an over and under for when, because this hotel, as you know, is under construction, over and under on when we would start to hear drilling and construction noise. I think I beat it by 10 minutes. But Kate, why don't you close us out on this issue? Talk about the We Network, and what some of the stuff you're seeing at Halcyon for this issue of both gender diversity and demographic diversity.
Yeah, Halcyon actually is quite, one of the features that makes it very unique is that we have a very diverse set of fellows. I'm really proud to say that our fellows are 51% of our founders and co-founders are women, and 57% of our ventures have a founder or co-founder of color. So it's really unique in that space. But what we have found that we now need to turn our attention to growing the community and making sure that the investors are equally reflective of the diversity of our fellows. There are some things that we see with great regularity, and that is that women and minority founders, when they go to pitch for capital, will, and there's a great Harvard Business Review article on this, will with great disparity get questions about the risk of their business instead of the opportunity. So that's one very simple thing that I think that any investor can flip in their head to make sure that your script is the same for anyone that you're interviewing, because honestly, otherwise your diligence is going to be awry and you're going to miss an opportunity. And that's really what we do a lot of time talking about is don't miss those opportunities that are out there. There are some amazing companies, and if you've got your blinders on because your pattern recognition says white guy in a hoodie, white guy in a hoodie, white guy in a hoodie, you're going to miss these amazing opportunities that are right in front of you. In terms of I had great time working with Jenny on assembling an amazing group of really amazing businesswomen from the DC area, every one of them in their own right, like a serial entrepreneur and thought leader. And they've basically contributed 16 million almost to investing in gender diverse teams and women-led businesses through Rethink. And Jenny can, I've learned a lot from Jenny, and she can talk a lot about, some of the statistics that they're systemic and they're no one person's fault, but we do all have to work together to equalize the playing field.
So you are now officially on warning, you in the audience. In about 5 minutes, I am going to open the floor for questions. So you have 5 minutes to think of a question. And again, I threaten you. I will call on somebody if there are none, and I will cut you off if you decide to sermonize or make a sales pitch. That being said, let me go to my final topic that I'm going to talk to the panel about, and that is the incubator accelerator rage that surrounds this nation. One of the things in my career at the SBA we spent a lot of time on was incubators and accelerators. We had a contest and we gave out cash prizes, and there are about 2,000 incubators and accelerators in America today. Respectfully, I think 1,000 of them are sort of, a couple of people playing solitaire at their Windows ME machine drinking coffee. But of the 1,000 that aren't, there's some that have gotten incredible traction, some on the West Coast. But here in the East Coast and in the Middle Atlantic area, it seems like there's been some fits and starts, no disrespect meant. There's some new entrants, for instance, Ally, which is a Verizon, if you saw about that here in this area. But, oops, my phone didn't break. I'll start with you, Kate. Do you think we've oversold the idea of incubation? Is it a promise that really can't be delivered? Or do you think is and will continue to be a role for active incubator spaces that will generate real companies with real outcomes?
This is a great question, because I personally think that startup is the best rebranding of small business ever in history. And I think that there is a big bubble, particularly in terms of tech, that is not sustainable. These crazy valuations we see out on the West Coast, it's not going to last forever. And similarly to social enterprise and all of this impact investing, I think that incubator has been co-opted by really shared workspaces and other things that aren't really true incubators. There are some amazing incubators, 500 Startups, Y Combinator, Mass Challenge up in Boston. And I think right now is a time where we're kind of in 2.0 phase, and the best incubators are rising to the top, and they will do so through their statistics over time and the success of the people that have come through. And I personally believe Halcyon is among them, and we will see.
Zvi, have you had any interaction with incubators? Have you hired people out of incubation? Were you in an incubator? What's your sense of this market?
Yeah, absolutely. So I think the rise in incubators is in part because they're just more pervasive towards helping any kind of small business, to your point. So we were a member of two, starting one early stage, so 500 startups, like very early days, like we joined 500 startups 48 hours after incorporating the company. And then one much later stage, which was more real estate specific, which is meant for companies are already really starting to blow up to help them scale even faster. And those were highly helpful for us. I think the challenge, the mindset I've seen, and I've mentored a number of people who've gone through incubators, is just like venture capital, they feel that that's what I have to do in order to start a company. Like many people feel, if I don't raise venture capital, I can't start a company. If I don't go through an incubator, I can't start a company. And that mindset, I think, has led a lot of people astray, because accelerators and incubators, they can help grow a company and kind of help start a company, but they're not going to do it for you.
Jenny?
No, I think that there are good incubators and there are less good incubators. We've tried to partner with incubators around the country so that if you know others, feel free to send them my way so that we can continue to get deal flow in places that traditional venture capitalists aren't funding. I would say Halcyon is an amazing example. If you haven't been there, it's spectacular, it's gorgeous, it has energy and has companies having impact. I would say, to me, one of the striking things about incubators relates to age, right? Which is incubators really fit for millennials. And for young people, whether they're housed incubators or not, they just sort of the energy, the culture. I will say that some I go in and I think, if I were 60 years old and I were 55 and I wanted to start a business, how would I feel in this incubator? And so I think it'll be interesting to see how incubators evolve. But right now, I think culturally, it's very much targeting a certain group.
It's almost like college all over again,
Yes,
right?
that's what it feels like.
We went through 500 startups. It's
Yes.
18-hour days.
You got
sleep
the beer
6
in the
hours.
fridge,
Yeah,
you know.
exactly.
Was there a Delta house at the 500 startups that you could visit?
For kind of, it was almost our apartment. We had an empty apartment with just 3 bare mattresses on the floor. That's where we lived for 4 months. So
I like it.
Kind of like that.
You pledges. I lied about last topic. I actually going to introduce 2 other quick ones before we go to the questions from this room. I recently had dinner with the head of one of the largest venture capital firms in America, and I asked this individual, aren't you afraid, because they have so much money, they have to do like $50 million or more deals, right? I said, aren't you afraid if you're going to miss the next big thing, the next $2 million investment in a startup that turns out to be, Snapchat or something like that? He said, hell no. Actually, he phrased it even more aggressively. He said, hell no. He said, I'm going to do giant deals in the last round of a big company that's overvalued before they go public, and I'll deliver maybe 2x returns to my limiteds, and they're happy with that. And I said, well, doesn't that mean you're really in the private equity business and not in the venture capital business? And he said, shh, don't tell anybody. Right? So I think we're seeing, and I'm going to ask sequentially down the row here, I think we're seeing a barbell effect in venture, which is either you're really, really big and have a lot of dough to deploy in major deals later in the stage of a company who's been de-risked, or you're much smaller, below $100 million fund, looking for those more nimble, smaller opportunities, keeping your dry powder. And that middle-sized venture fund seems to be at risk. I'll start with you. Do you agree with that philosophy?
I actually don't. I think that there's actually a problem at the extremes, and that the biggest opportunity in venture is in the middle. And here's why. I think there's these micro funds, 10, 20, 30 million, especially in the impact space, and they don't have the dry powder to do follow-on investing, which is, of course, where you make a lot of your money. And then at the big end, you've got people that have so much capital to put to work that they have to sort of jump into deals that they don't necessarily want, or they're outside of the theme that they're into, whether it's impact or education. You sort of have to go to the edges to put enough capital work. And what we found was that Cambridge Associates had a study in the impact space that showed venture style returns were highest around 100 million. And so that's sort of what we said, is we were going to cut off, give or take 10, 20%, the fund around there, because it gives us just enough to have follow-on capital to support entrepreneurs, but not so much that we can't be picky about what deals we go into. So I actually think that middle spot might actually be the sweet spot in venture.
You agree, Svi?
I believe it's a sweet spot, but that's also where a lot of people are missing, right?
There aren't enough.
There are funds.
Yeah.
We have plenty of investors and angels who invested early on, but then come Series A, they were just completely tapped out and couldn't go further. And then even with some of our later stage investors, as they've gone on to raise bigger funds, they have to start writing bigger checks, and they have only so many board seats they can take, and so they have to focus on bigger investments and bigger stakes. I agree that's a major challenge, right? We've been able to get through it with syndicates, but they're obviously challenged to the syndicate model. But I know this is an active issue. I'm not sure there's a good solution right now, unless it's certain venture firms I've seen have actually stayed methodical in saying we're only going to raise certain size funds and we're going to be able to make this investment because that works.
Kate, are you seeing this as well?
Yeah, we definitely see like the gap in Series A, I think the one thing that we are cognizant to talk to our fellows about is, be careful where you take that first pot of money for so many reasons, right? Because if they can't get you to the next phase, like with a relationship or with their own capital, then you're going to face that desert at Series A. So I would tend to agree.
2-minute countdown for questions. I'm going to ask the one gotcha that I did not prepare the panel for. It's a stupid one, but I figure I'll ask it anyway. Give me a wacky prediction, starting with you, Kate. Wacky prediction for 10 years out. A business, a market, an opportunity, a customer set, new set of regulations that does not currently exist.
Oh, wow, that is a gotcha.
If you want to think about it, I can come
go
down
back,
to
come
Jenny.
back. Give me a break.
Oh, thanks.
Jenny.
Wacky prediction. So 20 years ago, my mother was doing venture capital, and 2.5% of all venture capital dollars went to women. 20 years later, there's all this research that shows female entrepreneurs perform just as well, all these things. Less than 2.5% of venture dollars are going to women today, 2.19. So I believe 20 years from now, that number will finally have changed, because you're actually hearing people say, oh gosh, this actually matters. So I think as the economy turns, it's going to become that much more important for people to hire inclusively, gender and otherwise, racial, ethnic.
Aspirational. Zvi?
Aspiration.
I think I take an extreme look at human resources and how companies are formed, right? Like right now, we expect that all the people we hire, we've hired 70 people so far, everyone works for us full time and they're W-2 employees and that's it. But we're also seeing this incredible trend, especially among younger generations, of being much more independent, moving from company to company at a rapid rate. And I don't think it's just like a millennial trend. I think there's a larger theme behind it. So I wonder in 20 years, will we all work for one company? Will we all be completely independently owned and operated by ourselves? Right, just like in real estate, everyone works for themselves, and the relationship between a quote employee and a quote employer changes drastically.
A super gig economy. Kate?
A resurgence in paperback books. I think.
I'll take that back.
Thanks for the time to come up with a joke. The thing that I've actually been quite fascinated with, obviously, the threatening phenomenon of driverless cars, and the fact that in 10 years, we might be able to sit at home and order 20 pairs of jeans to come to us to try on, which will solve my enduring nightmare. And then pick the one that we want, and they all go back, right? So the holes, the gaps that are in online shopping today, I think are going to go away because of that. But then the tag-along thought that I've had is, okay, so then what happens about third places? Right, convening spaces. We've already seen shopping malls in suburban and rural areas decline, but I think that if city landscapes are not designed thoughtfully and around people convening and relationships and really fabulous places to be and feel soulful and be mindful, I think that we're going to see challenges in terms of people connecting on a human level, because there'll be less time for that.
Good job. Let me get a sense of the room before I go to Q&A. Who here owns a drone? That's it? You guys got to step up. Who here owns a BlackBerry? Okay, getting a sense of that technology. It's time for Q&A. We have a fascinating and broad perspective on this stage, not including me, but I'd like to ask you to ask them questions. Please, if you don't mind, say who you are and your organization, if it's applicable. And then direct your question. If it is to one of the panel, please do that. If it's to the full panel, you can leave it as well. So let's open it up for Q&A. Yep.
My name is Miriam. You said that you went to 500 startups, and being that the East Coast venture capital is more conservative, if you had to do it over again, would you start getting funds here, or would you still go to the Valley? My point is that it gives you a boost in the startup, especially in early stages. And would you do it differently? Would you start here?
Zvi, a time machine. Go back in time. What would you do differently or not?
Yeah, absolutely. I would consider it. When I think about the value that 500 startups provide, or an incubator provides, capital is helpful, but again, you can get capital from anywhere. They provided the network and the portfolio of other founders. That's something you can get to. But for us, the most valuable asset was the pressure, right? It's a very compressed timeline that you have to execute really well. In that case, it's demo day, which honestly, between you and I, didn't really net anything for us. It was pretty useless, but it was really good pressure, that forcing function to help us turn from 3 founders who had no idea what they're doing to 3 founders who had no idea what they're doing and a company. So that was definitely really helpful. I don't think it being based in the Bay Area, to be honest, really helped us much. We could have, if there was another one with the same network based on the East Coast, and there are, I would probably consider that too.
Other questions? Whoops, sorry. Other questions? Yep, right here. Reagan is the fastest microphone deliverer in the history of panels.
This is kind of an off-the-wall idea, but I'll throw it out when you're talking about...
Idea or question?
It's going to be a question,
Got
but
it.
it's based on an off-the-wall idea. The question really comes down to funding women startups. Is it possible, is there some possibility that women have a better idea than using venture capital, and that it's never going to work for women, that there's a different model that might in fact be better?
Okay, please, take it away.
I think that there are certainly many entrepreneurs, including many women, where venture capital isn't the right type of capital, and many businesses where it's not the right type of capital. I think that that said, is lots of data to show that there are many women where it is the right type of capital, and the questions that they're getting asked, like Kate mentioned, this Harvard study, and how they're getting viewed is so different by the same venture capitalists that they're not ending up with capital to scale their businesses at the same rate. And so their businesses aren't growing because they don't have that kind of capital to really go. And I'll give you an example. So this study looked at 125 venture capitalists and actually tracked their conversations with male and female entrepreneurs. And if a male entrepreneur was young, they would track it as that he was sort of promising. And if a female entrepreneur was young, same type of business, same prospects, she was called inexperienced. Caution was described very differently. If someone was aggressive and arrogant as a male, it was seen as a positive, that they were going to be strong and push through things. As a female, it was seen as emotional challenges. And so I say that we fund a lot of great male CEOs too. And so there are wonderful male and female entrepreneurs. But what I would say is, yes, there are lots of businesses where venture capital isn't right, but there are many, many female-run businesses where it is right and where there's not capital right now. So it's a great business opportunity.
Kate, you want to hop on this?
What Jenny said.
Excellent. That's the best hop on I've ever heard in a double panel. Other questions before we wrap up? Yes. In the back, right there.
So I study business psychology at Georgetown, and I'm just wondering what you think is the right balance skill-wise. So I really connected with what Tom said this morning about liberal arts background, but I also know how much tech is growing and is important right now. And so I'm wondering what you think the correct balance is, and if you see another big skill set coming up that we should be focusing on in professional development.
I think this is just the whole panel.
As an entrepreneur or?
Yeah.
Okay.
As an entrepreneur.
I think this is the whole panel. So Kate, why don't you start?
Yeah, I don't know if it's so much about a skill balance as finding that thing that you're just going to wake up every night wanting to do, and you're so passionate about that you have to see through, because that's the only thing that's going to keep you going, because it's really, really hard. There's a lot of painful analogies for entrepreneurship. One of the good ones I've heard is it's like chewing glass, right? Because you give somebody who's trying to launch this incredible business a glass and you say, you've got to chew through this and then you're going to get funding. They'll do it. They'll figure out a way to do it. The crazy ones are the serial entrepreneurs like Mark, who actually kind of like chewing through the glass, and that's why they do it again and again. But I would say, resilience and passion, like those are the things that are going to differentiate you, and those are the things that are going to see you through.
Zvi?
Yeah, I don't think, to answer the direct question, I don't think there is necessarily another core skill set that's what's mentioned. I think it's what matters is, regardless of how people identify themselves, is if there's a good balance among a founding team. So my co-founder, who's our COO, I'm very much like the people person, the idea guy, the motivator, the big visionary kind of thing, and also the technical side. He, unless it's in an Excel spreadsheet, he doesn't really understand it. And I give that as a compliment to him, right? Very much strategically focused, very much numbers focused, and that's what matters. So it didn't really matter what skills I have or he has per se, but what matters is together if there's a good balance. But I definitely agree. I mean, if you look across, and I mean, I think I've seen Sheryl Sandberg and others talk about this, the underlying, almost the operating system that every entrepreneur has is the need for persistence, right? Because you'll fail and fail and fail and fail again. What matters is, are you going to go into work the next day?
Jenny?
Yeah, I would say find a problem that you want to solve, because not only will that keep you going in the way that these guys just explained, but it will get your investors behind you, right? If you're really solving something that matters in the world, and I think that's where the future of business is going, you will have the support from your employees, you'll have the support from investors, you'll have a board that supports you, because it's more than just about you. And I think the more you can make it more than about you, the more inspiring it will be to those around you, and it takes a whole community to make these businesses really work.
Here. We have a question here. You still wanted to ask it? Hold on, let's get Reagan right down here in the front.
Oh, I was going to be have room for 3 more questions, and I have one right here.
Where? Oh, I'm sorry. Excuse me. You're next.
Mark, I'm glad to see that you're fully occupied, having passed the hat at the SBA. Mine is actually mostly an observation about women entrepreneurs. I had a wonderful conversation this week with one of the founders, partners in Golden Seeds, which some of you may know, which is a fund that's all about money, but is only invests in companies where there is a woman in the C-suite, ideally in the CEO or COO. And she made an interesting observation, because I've been going through, I'm with Hercules Capital. We are investors, debt investors in late stage, growth stage capital. She said, in the healthcare side and in the bio side, they are seeing a lot of women. They find it a lot easier because those are to your point, the women are much more likely to be in medicine or in healthcare. And so they move through that profession much more quickly. So as the oldest person in the room, I'm very excited about the prospect of women making a difference in the life science side. And to that, just as a comment, has that been your experience, that in the incubators that you are more likely to see women who are on the health side than on the tech side? And if so, what would you like to see change?
Kate?
Yeah, I would say that there's definitely some clumping around industries. And I think that's where we can be certain that this is more of a systemic problem than anything. One thing that I always point to is, okay, we're developing AI now. And AI is going to dominate every aspect of our lives in the future. Who's creating the AI? Right? It's mostly young white guys in Silicon Valley, right? And so are they creating this AI with their perspective to society as a whole, to different ages, to different genders, to different races? And it seems like from many of the public experiments, sort of Microsoft's and Facebook's AIs sort of going awry, that is part of the problem. So filling this pipeline gap is really everybody's problem, and it's no longer okay to just say we couldn't find that person. You have to find those people. You have to have a balanced team, or we're going to end up really lopsided. And back to the healthcare analogy, we're still fixing the healthcare system today from mistakes that were made in just testing on one section of the population for medicines or advice around diet. So that's a good example. If you need to be able to see what might happen if we don't fix this diversity problem in tech.
Let's try and get a couple more questions in. And artificial intelligence from white guys in hoodies in the Valley, I think they're definitely artificial. The issue is whether it's intelligent or not. So we have a question right over here. Will Reagan? Yep. You? Thank you.
Yes. Good morning. My name is Joseph Shirizzi. I'm a senior in computer science at GW and also the founder of Fourth Wave, an education augmented reality company. My question is, what sort of pivots did you make early on in all of the programs that you're involved in and businesses, and how did you know when it was time to make those sort of pivots?
Good questions. V, start with you and then the rest of the panel.
Yeah, I mean, I think the concept of a pivot is a little overrated. It shouldn't necessarily be binary, like I tried something and it was a complete failure, therefore I'm going to try something completely different. That being said, if you look at how Contactually was October 2011 to where we are today, completely different. So it really wasn't a pivot as much as an evolution. And I think that was solved through really tight customer development. And that's really helped us form and completely change over time what the product was, and also who we sold it to. So for example, I'm thankful that we're ranked as one of the top real estate CRMs in the country. If you had asked me October 2011, hey, Svi, you're going to be on stage at real estate conferences talking about one of the top real estate CRMs, I would say you're out of your mind. But I think that's the cool journey of a startup, is you never really know where you're going to end up.
Jenny?
I'd say two things. One is that we had different people on the team early on who cared about different things. So some really cared about impact investing and said, who cares what the team looks like? If they're doing something that's changing the world, that's what matters. Some people really cared about inclusion, and even within that, and so I think what the big debate was is, can you do both, right? Is it too limiting deal flow-wise? And if anything, it's not limiting. It actually, we get thousands of companies coming our way, and so the evolution was this realization that the two really went hand in hand. I think the second evolution for us was realizing it is about so much more than one type of inclusion or one type of diversity. And while as much as our fund is focused on gender, what we've realized are companies that have racial, ethnic, and other diversity, and even our own team, is so critically important to success, right? The companies in the top quartile for returns in their industry, the top quartile for racial diversity, are 35% more likely to have higher financial returns than their mean in their industry. And that was a really important realization for us.
Kate?
I think it's probably more relevant to speak about an example from one of the entrepreneurs that we incubate. And this is also a great example illuminating the point about resilience from earlier. We had an entrepreneur who was disrupting a certain market and got a cease and desist letter from a very large publishing house because the name of their company was the same as some program that this publishing house was running. And many people's responses would have been to go home and cry. But these guys celebrated because they'd come to the attention of this publishing house, and they took it as an opportunity to do an amazing rebrand. And that's sort of like how crazy optimistic, passionate, these guys really are, and it's what sees them through and allows them to make these pivots.
You have the last question, and I hope it's short, sweet, because we're a little bit late, but this is the last question for our panel.
Oh, it's simple and complicated at the same time. Broad question, you can argue this either way. The combination of in the last 10 or 20 years of the development of the internet, the development of the smartphone, means that any kid in a dormitory room can come up with an innovative solution for something at zero capital cost and all by himself pretty much. And you create something like a Facebook, or a little while back you could have created Microsoft. Nothing wrong with that by itself. The problem is, or the argument is, that millions of people spend countless mega hours doing things like that are focused ever more narrowly on ever smaller projects. We have 1 million smartphone apps by now. From a global perspective, aren't we focusing too much of our time and energy and investment on ever narrower solutions to ever narrower problems when there are other areas of research or development which could add more value in the long run?
So that is what we call a meta question, just for the record. Okay. And I'm going to
meta rather than.
I'll try and get the panel to focus on a portion of it. And just for the record, that person in the dorm you referenced should be named herself, not himself, just because of the sensitivity. But I'm going to go right down the panel. So Jenny, give us some thought on that kind of meta thought.
Yeah, I actually think that I sort of look at the world the opposite way, which is I think that we are seeing more and more millennials and more talent deciding to use their energy and use technology to solve the world's greatest challenges. And that it used to be that you had these do-gooders that went into nonprofit and government, which still thankfully happens, and then everyone else said they wanted to make money. Now you have people also going into the private sector to actually solve great challenges, and they're using technology. So one, I would say that, and two, I'd say that sometimes going after a really teeny problem can solve something very, very different. And some of the world's best inventions, which I won't take the time to explain now, came after looking at something very narrow, and then of course solving something else. So
Zvi?
I would,
Yeah, I mean, I think there generally
Sorry.
is a lot of fair criticism in that. I think when you look at the industry, the early stage technology industry in general, it is more focused on point solutions. And yes, some of them can grow big. You know, everyone thought Uber was this tiny little toy app, and look where it is now. But I don't think there is. I think there is enough argument that there's not enough investment in moonshots. And I think I've seen some people in the venture community start to kind of re-gear and retool themselves. That being said, I think, you know, I actually think it's powerful that there are so many people throwing out so many different ideas. And it's not a waste, right? I mean, like, plenty of people make money off picks and shovels, as we know. But I think it's trying out so many different things. And sure enough, one thing works, right? Facebook was not the first social network. There were many social networks before. They just happened across the right combination, right? Almost seemingly, if you look at a macro way, in a random way. And so I think that's really powerful that anyone can go and in their dorm, you know, he or she can just start an application that could end up changing the world.
Kate, bring us home.
Yeah, I would do the both and answer as well. Just in terms of, I do think there are going to continue to be these things that these brilliant people can come up with very simple solutions for. But, you know, I just read The Third Wave, right? And Steve Case's basic premise is, you know, the things that are left are the big things that are going to need more complex solutions because they're more complex problems. They're going to need, you know, wise people like the people we have here to help solve them, and many of you. So, yeah, I think I hear you and I agree with everything that's been said.
You guys did a fabulous job. Ladies and gentlemen, please join me in thanking our panel for their thoughts this morning.